Hey everybody, we are back with another dose of economic reality. Today we're going to start off our main stories about the housing market. Now you've been hearing me warn for a long time about the housing bubble. Up until about the beginning of the year, we told you that home prices were going to go up for the past several years with the low interest rates, everything else, the rescues that came out in 2020, the forgiveness, the foreclosure preventions, all that. But all that did was make the bubble even bigger. So now, with higher mortgage rates, with the average consumer being on the edge financially or over the edge in some cases, many people approaching the edge financially, more people are being cautious about overspending, and especially a home. A home is one of the biggest investments, in most cases, the big investment that anyone will make in their lives. And the housing market is turning. It's not just people like me saying that anymore. We see Redfin, even Redfin now predicts the sharpest turn in housing since 2008, since the 2008 housing crash. After 2 years of record high sales, data shows the housing market is starting to cool down. Of course, you all knew this because, over close to a year ago now, I told everyone here that the second half of 2022 was going to be the beginning of the turning point. And here we are in September. It's late September. Actually, at the end of September, that'll be the end of the third quarter. So we're getting there. But this is just beginning. We're going to see this play out over several years. Several years of a depressed housing market. But even Redfin is talking about it now. So that's a good thing. Next. And just some statistics here out of the recent housing market data here. For the first time since March 2021, the average home is selling for less than its list price. We've told you about the price cuts. We're seeing homes here in San Diego with $100,000, $200,000 price cuts. Now, a lot of this is just price cuts from sellers still drinking the Kool-Aid, thinking that the housing market is not turning, but sellers are becoming aware now, and they're facing the reality, so they're having to cut their prices. But at the beginning, when a lot of the sellers, even now today, when a lot of them put their home on the market, they put it up there against comparables over the past few months, but it's a rapid downturn that we're seeing, so more sellers are having to cut their prices more drastically. Now, on one hand, you look at the price cuts and you say, wow, this is a crash because the list price was $100,000, or let's say the list price was $1 million. Now they're asking $700,000. You're like, wow, what a crash. It came down $300,000. That's not the median price, though. So when the price comes down from the list price, that's a reduction, but it doesn't mean that that's the median price and that median prices are dropping by that much. It just means that the seller, in many cases, had expectations that were too high, not realizing how rapidly the housing market is changing. Also, a correction or revision from our previous video. I had quoted in there that home prices were down 1%. That was just actually the previous month. If you look at the most recent month, which I was actually talking about in that video, it was a 3% drop. So combine that with the month before that and the month before that, we're actually down about 5% total, which is a good thing for buyers or potential buyers. My word of caution here has always been hold cash, keep stacking, stack whatever you think you need to stack. And for everyone that's different. For me, that happens to be silver because I know silver ultimately at the end of this fiat money experiment that we're in right now, at the end of this, there's going to be real money introduced, but it could be several years down the road. But I am currently in buying mode in silver. Currently, I'm not yet in the buying mode for real estate because I'm in San Diego and prices are still way overinflated. A 5% price correction here in San Diego is nothing when you look at how much homes have risen over the past few years. This is a monster bubble, a mega bubble, a super bubble. People are calling this the everything bubble because of the stock market and everything else that we see at elevated prices. We've already seen some bubbles burst. We saw the crypto bubble. That was a bubble. When prices ran up that fast, that steep, you knew there had to be a pullback or correction. So there's always boom and bust cycles. The question is, how do we best time these and prepare for what's coming? All right, let's talk about the Fed. The Fed is not the friend of the markets right now. We're looking at another rate hike here, at least a 3/4 point. From what I can see, if it's a 1% rate hike and 1 basis point rate hike, that could cause even bigger panic. We saw the Dow Jones actually sell off here today as I'm recording this on Tuesday, September 20th. Over a 300-point sell-off. All major indexes in the red today, an average of about 1%, up to 1.4% if you look at the Russell 2000. So the bear market continues. This market was all based on easy money endless amounts of debt, endless liquidity, and now the reverse happens, higher rates, meaning money is not so easy, harder to borrow money. Now the reverse happens. It's so simple. This is all steered and engineered and manipulated. And please excuse me just for a minute. I'm running on very little sleep. I've got my iced coffee right here. And thank you for those of you that have given me a tip that goes towards my coffee jar. And I try not to buy expensive coffee. I buy the ground coffee and run it through my Keurig machine. I've got this special little cup there that's it's like a metal cup. And I got less than 5 hours sleep last night. You might see it in my eyes. I'm the type of person where if I don't get much sleep, you can really see it in my face. I look completely different. I'll look like I've aged 20 years if I don't get enough sleep. But even 8 hours is not enough for me. I'm the type of person that could sleep all day. And even coffee sometimes doesn't wake me up if I'm really tired. But thank you for those of you that have given me tips and supported the channel. I'm going to give a few shout outs here at the end of the video. But first, consumers are feeling the pinch. Electric bills soar across the country as winter looms. Rising natural gas prices are expected to make even more expensive to light and heat your homes in the coming months. So another area where we need to be very, very careful because rising prices are going to bite a lot of household budgets. Next article, the Fed's now expected to keep raising interest rates and hold them there for a longer period. This is the type of thing that is spooking the markets. The easy money is being pulled away. The liquidity is being pulled out from under this. If the Fed were to completely stop what they're doing, the entire market would crash. So they're going to bring this down in a controlled fashion, a controlled demolition of the economy. And the Feds even came out and said consumers are going to see massive job losses. And they're saying these job losses are going to be a good thing to fight inflation. So I guess when everybody's broke, when no one can buy anything, prices have to come down the way they look at it. So it's pretty bad, though. We're not increasing things on the production side. We're just expected to pull away some of the support and have people go broke, have people lose jobs. This is not limited to the U.S. Inflation is running rampant across the globe. We've talked about many countries here that are seeing runaway inflation, hyperinflation. The Germany economy over there is crashing right now with double-digit inflation and people not keeping up with the rising cost of living. So people that think that this is about just getting one person out of office or replacing somebody, replacing some leader, you've got to wake up and realize this is global. This entire fiat money system is global. The central banks run the economies around the world, and they create the boom and bust cycles. They overinflate the economy, they overinflate the bubbles, they overstimulate, they overprint, they overcreate money. I don't use the word print. I try not to use the word print anymore. They don't actually have to print it because it's all digits right now. They can print this money in unlimited amounts, and it's that way across the world. And the dollar has been the king of these fiat currencies for many, many decades. Now that's starting to shift. Also, we have the BRICS nations. We have Brazil, Russia, India, China, and as is South Africa, jumping onto a hard asset-backed currency, or it's going to be partially backed by hard assets. We even see gold being implemented with the currency and with trade in some countries. We see central banks scrambling to buy gold right now, right? So if gold wasn't going to be the end or the next phase in this money system, why would central banks be hoarding it? Why wouldn't they just be hoarding dollar bills or paper bills, right? The central banks know. If you look, the central banks are still accumulating hard assets. This whole fake phony economy is based on easy money, funny money, digital money that can be created out of thin air. It creates boom and bust cycles. Some people say it's on purpose. Other people say that the people running things just don't know, that they're just stupid people. I'll let you decide what the problem is or what's the cause, but the solution is always the same. Keep stacking, prepare, get ready for buying opportunities in certain markets like the housing market. Even Redfin is out now warning on the housing market. Other areas we may continue to see rising costs, so it's definitely going to be different than anything we've ever seen. The housing crash is not going to be the same as 2008. And a couple quick thank yous right now, or shout outs here. Christopher Quinn, as always, thank you very much. Sage Wisdom, thank you very much for your support. Robert Ruiz, thank you very much. And Mike S., thank you all for supporting this channel with that super thanks button down there. Obviously, People are doing very well in some cases because I see that people are handing out tips here to people like me. Thank you again very much. And I hope every one of you is doing well at this time. And I hope everyone's continuing to prepare for what we have ahead of us. Massive food inflation. I'm still getting canned food every time I can, a few extra cans. Every trip to the store. I try not to leave the grocery store without getting a few extra cans to put away. Just one of the many things that I'm doing. Keep stacking, folks. Keep preparing. Because it's going to get bad, it's going to get difficult for a lot of people. And this is just the beginning. I think it's going to get a lot worse. I think we're going to see economic collapse. We could wake up one day and there could be a complete implosion of this entire system, because if one of the gears goes out, if somebody doesn't press the right button and things go out of control or stop, if the credit markets freeze up, you're going to see a massive implosion. But until then, until we get some sort of surprise situation that pops up, it's going to be a controlled collapse of the economy. So keep stacking. We have time to prepare, because it's going to be a slow motion decline, in my opinion. Please let me know what you think down in the comments. Add to this, correct me. Thanks for being here, everybody. We'll talk to you very soon. Peace.